Hello everybody, a very warm welcome to SD Capital's official YouTube channel. Today's session is actually going to be a continuation of our Q&A sessions. We had 3 sessions so far and this is going to be the 4th one. The last one was supposed to be a Q&A session and then something special happened and hence we had to discuss that. But today we are resuming our series. At the end of today's session, as usual, there will be a free stock recommendation. But before that, I'm sure if you haven't listened to our previous video, I would like to remind you what was that special event. The special event was Nifty crossed its previous high, which was 12,400 on 9th of November. And then now it is trading around 13,000. Which means 600 points above the previous high already, and it is still showing its strength. I'd like to remind you that when we started the official YouTube channel for SD Capital, that was very early April, everything was kind of doom and gloom. Everybody was very skeptical about stock market situation, the overall world situation given the pandemic was unfolding. We, SD Capital, were actually very confident. There was a video, if you go back to our that video, which was March and early April video, Coronavirus and Opportunity. You can watch it for yourselves that we kept on telling this is an opportunity. We were very confident about Indian stock market's growth. And we just said that this is actually a golden opportunity to invest because everything was trading at a deep discount. And Nifty has proven that it has that immense strength in it to fight the aftermath of COVID even. So it was trading at 12,400 in January. Then it went down to 7,600 in April. And now it is back to 13,000. Nifty scales new highs every couple of years, if not more frequently. Such is the strength of equity market in India. And I would like to remind you that SD Capital, the same company which predicted that Nifty will bounce back in April when everybody was skeptical, we are again telling you that Nifty is going to scale new highs for the next 15 years. Such is the demographic dividend for India, such is the geopolitical situation, and the policies we have recently seen is really encouraging. World Bank and every other institution has been reminding India that reforms are long due, and we can see that is coming. And hence we are absolutely confident about Nifty scaling new highs for next 15 years. If you are here for the longer term, if you want to get the biggest return possible for your money, long-term investment in Indian stock market is the answer. If you look at the foreign investment inflow figures for last 7-8 months, you will see what is happening. Typically, outside India, people from the Western countries like US, UK or Western Europe, they are very aware investors. They invest in stocks heavily. Almost 50% of the population in US invest in stock market. In UK, that number is around 35%, whereas in India, that number is in single digit. So people here are much more aware of the situation across the globe with respect to investments, and they are absolutely confident about Indian stock market's growth opportunity, and hence they are heavily investing there. So you may think that this is the all-time high. We don't. We are sure that Nifty is going to break this record again and very soon. Anyways, all said and done, now it is time for today's Q&A session. As once again, we'd like to remind you that we have these sessions on our channel to build the awareness, to help people understand that stock market has got nothing to do with betting. It is all about calculation, it is all about science, and it's all about patience and discipline. So it is very much possible for anyone to start investing in the stock market even on their own. As a beginner, you need to study 8 to 10 months, and then every week you have to spend 10 to 15 hours to be on the top of the things, and then you can absolutely maintain your portfolio on your own. If you don't have that kind of time, or you think it is not your piece of cake, please start working with any portfolio management company like SD Capital. Why mutual funds or SIPs do not help? We have done enough videos on that, explaining the beta value, the alpha value, and why they are always trailing behind the market. We have done enough videos on that. If you are interested, please go and explore, and that will help you understand why that is not an option really. Coming back to today's questions. So I have a cheat here as usual because I can't remember. I really can't remember all those questions with all those figures. So the first question, Airtel. I have bought 50 shares of Airtel at rupees 440. Then I again bought 50 shares of Airtel at 495. Should I hold on to Airtel now, or should I exit? So let's do the calculation. 50 at the rate 440 and 50 at the rate 495. So average buy price is 468 and current market price is something around 475. Well, Airtel is not a great company to the best of SD Capital's analysis given their debt levels. We are not convinced. But since you have got these stocks, we would like to say that you should first of all maintain a very strict stop loss here. So our suggestion is 380. So rupees 380. If Airtel breaks this and go down, then you better book losses and exit. Do not waste your money further. On the upside, it may reach 600. But if you maintain the stop loss, then basically you are limiting your losses. And then if it is having a bull run, exit at 600. That's all we will suggest. The next question, Tata Motors. I have got 100 stocks of Tata Motors. Average buy price was 350. Then at the beginning of Corona, April-May time frame, I have bought 400 Tata Motors stock again at the rate rupees 80. Should I hold on to it or should I exit? First of all, buying Tata Motors stock during beginning of the pandemic, that was a good move. That was a really good move. 80, we really appreciate that. Now, if we do the calculation, average buy price right now is 134 for you, and it is trading around at 170. First of all, Tata Motor is not a great company to invest with, given their business circumstances right now. But as I just said, since you bought 400 stocks at rupees 80, it was a good buy. We suggest that you put a stop loss order at 140 and the target is 200. So it may reach 200 in near future. But if you maintain the stop loss, it's not the classic stop loss. Basically, it will, if it starts going down from 170, you better exit at 140, because after 140, there is a very less chance that it will turn around. So that is what our analysis is about Tata Motors. The next question is, well, this is an interesting question. Does SD Capital provides intraday calls or swing trading calls? SD Capital do not believe that intraday trading benefits retail investors. We have explained that numerous times, and hence we again reiterate our position that as retail investors, one should not indulge into intraday trading. Swing trading Well, once again, swing trading is probably not as risky as intraday trading, but then again, SD Capital is for long-term investment, long-term holding, where you can park certain amount of investment in the stock market for the longer run. We are going to generate a much better return for you compared to what you get with other investment vehicles, including mutual funds and SIPs and all other schemes. Fourth question, M&M. I started buying Mahindra and Mahindra stocks in 2016. Okay, and so far I have 200 stocks. Average buy price is 670. So what should I do now? Should I book profit or should I hold on to it? So current market price is 670. Sorry, 730. My bad, 730. Mahindra and Mahindra is not actually a bad investment. It's not. We would suggest that you stay put right now. Once it reaches 800, you can exit 50%. So that is sell 100 stocks, book some profit. And we are, given the bull run of Nifty, we think it may reach up to 900, 950. So that will be the time to exit rest of your positions. But we also suggest that you maintain a stop loss at rupees 530 to limit your losses. Today's fifth question. I have got Cipla, 170 stocks of Cipla. Buy price is 536. I also have SBI stocks, 250 SBI stocks, average buy price 242. What do I do about these stocks now? Cipla is a very good investment. We are convinced that Cipla has got fundamentals right, and Cipla has got significant upside actually. Current market price is 750. We believe it will go up to 950 or 1000 even. At that point, probably it will make sense that you exit 50% of your positions and rest you can hold on to. It is going to have more upside to it. Cipla is a good buy, no question about it. Next thing, SBI. What should I do? A strange thing is happening with SBI actually at this time. If you look at it, it is actually the price is going up till 260, 270, and then it drops down to 180. So this is not the classical range bound because the range is so large here, but it is range bound by definition as well, by definition actually. So SBI is our biggest retail bank in India, and it has got its strengths. There are certain things which has happened which has got a negative impact on it, but it has its own strength. So we are confident that SBI is a good buy. We would suggest that you put a target of 300, and when the SBI stock price is hovering around 180, 190, you better build some more positions to reduce your average buy price. And once it is coming back up to 300, at that point it will be wise to at least book some profit there. So that's all we suggest about SBI at this point. So today's 5 questions we have now covered all. We will do one more session on Q&A. You know how to reach us. You can reach us via WhatsApp. You can reach us via our page inbox. You can contact us via our website, or you can straight away drop a note to mail.sdcapital@gmail.com. Whichever way is comfortable for you, please feel free to reach out. If we believe discussing your question is going to benefit our other viewers as well, we will definitely discuss it on our YouTube channel. Otherwise, we will answer you 1:1. We try to answer as soon as possible, which is in 2 to 3 days time typically. We try to do it sooner, but sometimes we get too many questions, and hence. Anyways, all said and done for today. Now it is the time for our free stock recommendation. And I would like to remind you once more that we provide free stock recommendations twice in a month. So far, we have recommended 14 stocks, and 90% of those have gone up significantly. And the others are where they are trailing behind. We'd like to remind you that these stock recommendations are for longer term. This is not for 3 months, 6 months time. This is typically for a couple of years. And hence we are confident that all the stocks we have recommended so far will do actually well in that time horizon. Asian Paints, for example, when we recommended it, it was hovering, the price point was around 1700. And now you can see that it is 2100, around that 2100, 2200. So you can see the appreciation. So it is in a matter of months, it has appreciated. So if you are following our channel and if you think the free stock recommendation suits your portfolio, please feel free to start building your position into that stock. Obviously, the target price or stop loss price is shared with our customers. But even as a channel viewer, please feel free to start building your positions if it works for your portfolio. So then today's free stock recommendation is Maruti Suzuki. Our analyst team has got enough confidence in the Maruti Suzuki stock. We believe it will have a bull run ahead of it. So if it works for your portfolio, please start building the positions. And that's all today. Vaccine news are pouring from every quarter. AstraZeneca is going to do the third trial as well. Pfizer has already filed for approval. Moderna will probably soon go for approval process. We are confident that Q1 next year, we will have multiple vaccines available across the globe. And that only means Indian stock market is going to go up. There will be corrections. Corrections is part of the journey. But as we said in the beginning of the video, for the next 15 years, Indian stock market is simply unstoppable. If you want to invest, start now and you will have a bull run. Never ever think that this is too late. If you can do Google yourself, you will see that Nifty scales new highs every couple of years. So it is never too late. You have time to join this growth run and you will get a better return for your investment through Nifty market always. That's all for today. Thank you. Take care. Let's wait for the vaccine. Bye.